Welcome to Market Momentum. Right now, the markets are just full of noise. So today, we're going to use some AI-powered analysis to really cut through all that clutter and get a clear picture of what's actually going on.
So here's the deal. We are at a really critical point. The S&P 500 is just knocking on the door of all-time highs, right? And crypto, it's definitely showing some signs of life. It honestly feels like that calm before the storm. But, under the surface, there's this huge tug of war going on between all this bullish optimism and some pretty serious risks. So the billion-dollar question, really, is which way does this thing break?
All right, so let's get right into it. If you want to understand what's going on with stocks or precious metals or even crypto, you got to start with the one thing that's driving pretty much everything right now, and that's the US dollar. Seriously, it is the first domino, and wherever it goes, everything else is likely to follow. And what we're looking at here, well, it's a pretty powerful story playing out. You see, after dropping for a while, the dollar index has found this really solid floor. And this isn't just some random dead cat bounce. No, it looks a lot like what we call an accumulation phase. That's basically where the smart money starts quietly buying things up. So this upward move we're seeing, it's probably not a fluke. It looks more like a real foundational shift that could have some serious legs. Okay, so why should any of us care about a stronger dollar? Well, think of it like this. It's a giant magnet for global money. When the dollar is strong, it makes U.S. stocks look way more attractive to investors overseas, which can pour a ton of fuel on a rally. But at the exact same time, it puts downward pressure on anything priced in dollars, like gold and silver. It's just a perfect example of how all these markets are totally connected. All right, so let's take that strong dollar idea and see how it's affecting U.S. stocks. The S&P 500 is literally perched right at a record high. But man, it is a tense situation. It's kind of like a climber who just reached the summit only to see a massive storm rolling in. So what's next? Do we push higher into clear skies, or is it time to scramble for cover? Okay, 6764. Burn that number into your brain. If there is one number you need to be watching right now, that is it. That's the all-time high for the S&P 500. And let's be clear, the S&P is the true leader of this market. Wherever it goes, the rest of the market, including the Nasdaq, is probably going to follow. So whether we can punch through that ceiling or get slammed back down, that is the question on every investor's mind. And this really brings us right back to that fundamental tug of war. Look, on the one hand, the potential for a huge rally is right there. It's undeniable, especially if all this uncertainty just clears up. But on the other hand, the risks are just as real. You've got the threat of a long government shutdown looming. You've got these whispers about systemic risk in the banks, not to mention all the geopolitical stuff going on. All of that is acting like a giant anchor, holding the market back. So what do? How do you play this? Well, looking at the charts, there are really two clear strategies. Strategy number one is the breakout play. You just wait. You wait for confirmation. You let the market prove itself by breaking, and this is key, holding above that 67-64 level. The second strategy? You look for the dip. If the market tries and fails to break out and it pulls back to a solid support level, maybe around 6,500, well, that could be a fantastic buying opportunity. Okay, let's circle back to that strong dollar we talked about at the beginning, because its rise is having a direct, powerful, and frankly, negative impact on precious metals. They had what looked like a really promising bounce, but now, a sharp reversal. This is textbook stuff, a perfect example of what a strong dollar does. You have to be careful here, because that recent jump in gold and silver prices, it can be super deceptive. What we're probably looking at is a classic bear market rally. It's like a fake out, a temporary price surge that happens inside a bigger, longer downtrend. And these things are notorious for trapping buyers who think the bottom is in right before the price falls again. All right, for gold, the number is 41.59. And listen, this isn't just some random number. It's a huge resistance level. It's acted like a brick wall ceiling in the past. Now the price is creeping back up to it, but our indicators have already flipped to sell. That tells us this is way more likely to be a rejection point than a breakout. And guess what? It's pretty much the same story for silver. The price has rallied up toward this critical zone around 49.40. Now that level has been both a floor and a ceiling before, so it's a big deal. But as it gets closer, the momentum is just fizzling out. You can see it. This rally is really looking like it's running out of gas. So when you put it all together, the strong dollar, the technical picture, the strategy here is crystal clear. Just be cautious.
Seriously, this is not the time to be jumping in and buying gold or silver. The risk of another leg down is just way too high right now.
All right, let's switch gears and jump into the world of crypto. And you're probably going to see a theme here. It's echoing the exact same story of stalled momentum we're seeing everywhere else. Just like the S&P, just like gold and silver, the entire crypto market has basically just slammed face first into a massive wall of resistance. That recent uptrend, yeah, it's come to a screeching halt. Okay, so for the crypto market as a whole, the big number you need to know is $3.41 trillion. That's the total market cap, and right now, it is a formidable ceiling. I mean, it is a solid wall. Until the market can punch through that level, and more importantly, stay above it, any hopes for a big, sustainable bull run are basically on hold. And look, this isn't just a problem for some obscure altcoin. This is widespread. We're talking about the big dogs. Bitcoin, Ethereum, XRP, they are all hitting their own resistance levels. This tells you it's a market-wide problem, not just some isolated thing.
So what's the big takeaway here? In one word, patience. Our indicators are flashing sell right now. So jumping in and buying would be like trying to swim upstream against a really strong current. The charts are suggesting we might not even see a real attempt at a breakout until maybe November, after some of this other macro uncertainty has a chance to settle down. So for now, it is absolutely a waiting game. All right, let's wrap this all up and put it into a clear strategy for you moving forward. The single biggest theme, whether you're looking at stocks, metals, or crypto, is that we are at a major decision point. This is a time to watch and wait, not a time to be making aggressive moves. So let's just boil it down to the absolute must-watch levels. For U.S. stocks, it is all about 67.64 on the S&P. For gold, that ceiling is around 41.59, and for the entire crypto market, that magic number is $3.41 trillion in market cap. These, my friends, are the lines in the sand. They are going to dictate the next big move one way or the other.
And that really leaves us with one final and I think crucial question. In a market like this, one that's full of so many conflicting signals, where you've got record highs fighting against huge risks, is the biggest danger really a market crash? Or is it our own impatience? Could the most costly mistake you could make right now be jumping the gun and acting before the market truly reveals its next move? Thanks for joining our channel. Your subscription and likes will be appreciated.